Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite, we have Ted Bragg. He's the head of U.S. fixed income over at Nasdaq, and we're here for a December jobs report preview as well as Nasdaq fixed income outlook. Thank you so much for joining us. On set, Happy New Year. Welcome to 2019. Busy year for you. End of the year bond rally taking effect right now.
Yeah, Happy New Year to you as well. And absolutely, a lot's changed even today. And if you think about the last 3 months, the rally that we've had in the Treasury market, 10-year note yields have gone from 324 and now 258, kind of right before I sat down, and we might even be a little bit lower as the equity market continues to trade off. And lots of factors around that, but also a big part of the conversation we had last time was about the curve and whether it was going to invert or not, and why was it inverting, what was happening. And now that's another part of the debate. What do we think can happen with the yield curve? Big rally in the front end today, 2-year notes 240. So a little bit of flight to quality and some money getting put into the front end.
All right, there's a number of risk macro factors out there. We have the government shutdown where there's no timeline for that. Brexit is another one. Doesn't seem like 2019 is going to be any less volatile, at least for the first quarter.
Yeah, so December busy, and then now what do we focus on? So the immediacy of the economic numbers, but the bigger picture stuff, tariffs are out there. So kind of the catalyst the last couple of days, negative effect to growth and corporate America on the tariffs. Brexit, everyone realizes, a hard Brexit is 3 months away, and a hard Brexit is bad, and no decision is bad. And what does that mean from a backlog from Europe and an additional slowdown? Government shutdown. We know we get the payroll number tomorrow because the Bureau of Labor said, yeah, you'll have the number, but there's the potential that we might not get other numbers in the next week or two because they might not be available, or we could get a massive distortion because of the shutdown. 800,000 people, the claims around that. What does it mean for the furlough? So the number will print, you could get some volatility, and then all of a sudden an explanation after that on whether this is related to the shutdown or not. And then the last part of the government shutdown is supply. So today, 78 billion in Treasury securities that were announced, a 3-year note, a reopening of a 10-year, reopening of a long bond. But can they continue to come with supply if the government continues to maybe have some dysfunction, the spending not approved, and/or new issuance, and will they have to go to the bill market instead? So it could push the curve around. Not saying that's going to happen, but if it gets prolonged, absolutely.
So at the December employment report that comes out tomorrow morning, I would imagine that wage growth is going to be a really key piece of that report because, of course, that's going to impact the FOMC's outlook in terms of interest rates and inflation.
Yeah, headline number 180 and the new jobs. 3.7 in rate, but the point you make is what's the work week and what are the average hourly earnings? Because we're all still looking for this inflation sign, and even Fed Governor Powell said he hasn't seen it yet. Maybe we're supposed to relook at the models as a catalyst for what is the FOMC going to do end of January and the rest of the year. FOMC rest of the year, 2 months ago when we talked, it was, 3 more tightenings or 4 next year. Now the Fed dot plots have 2 more tightenings. But today, the market is basically saying we see a 50% chance of an ease next year and a 100% chance of an ease by April 2020, which is totally opposite from what we heard only a few weeks ago from the Fed.
Right. It seems like the market's very disconnected in terms of how well the economy is doing, especially when we look at the data points. For the most part, with the exception of housing and manufacturing, it's not that weak. I mean, the numbers are still pretty decent. Yeah,
housing's a little bit slower. The manufacturing number was the worst we had in 2.5 years today, ISM. But all the other numbers, retail sales, consumer spending, the labor market, as you said, big pickup. So it was a little blip. And all of a sudden, if we have lower rates, what does that do to the housing market? You've got a 70, 80 basis point change. Does that all of a sudden lower mortgage rates?
All right. What's new with Nasdaq fixed income? What's on the horizon?
Yeah, so we replatformed newest Nasdaq technology, the Nasdaq Financial Framework. Very excited. And great feedback from our clients on how it's performing, and from that we wanted to build. The message for 2019 is we want to have new protocols, potentially having a Nasdaq close. We want to have some crosses. We want to have some auctions. We want to expand our distribution, access to the platform, and then we want to expand the product. So look for trading of curves in the very near future. You can trade 2-year note against 10-year note as one instrument within the platform.
All right, exciting. Can't wait to hear about that. Let's wrap it up with Rates Evolve, the conference that you'll be attending, and as will I, January 24th in New York City. It's the Global Interest Rate Conference by Viable Markets. Sounds like first of its kind.
Yeah, so a new conference, interested with the participants that are going to be there and the topics. We're going to talk about market making and market structure. We're going to talk about clearing. We're going to talk about the repo markets. We're going to talk about the swap markets. Really kind of a rates-focused market. And then also from a guest speaker perspective, we've got head counsel and directors from SEC, DTCC, CFTC. So you've got the regulators there, but I think it's the ability to interact with your peers and the multiple market makers and the multiple participants in the market that can make this one a bit different.
All right, Ted, thank you so much for the update. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.